Hello, welcome to IGTV's look ahead to the week starting the 17th of July 2023. We'll be joined shortly by IG's Axel Rudolph in just a second, but first let's take you through a jam-packed schedule for next week. Of course, it's all about earnings, but there's plenty of economic data as well. China out with second quarter GDP growth rate numbers, industrial production also in focus, as well as retail sales and the unemployment there. As you already know, China has been struggling with softening mood music from its economic front, and it would be no surprise if officials there did come up with more support. So we're looking out for that for you. On the US side, we have the New York Empire State Manufacturing Index. And then on Tuesday, it's also going to be a rather hefty day with the minutes from the RBA, the Consumer Price Index out of Canada, inflation painfully high there, as well as retail sales numbers from the US and API crude oil inventories and industrial production numbers too. Then midweek, look out for more data out of the US, building permits this time, and the EIA crude oil inventories. And from the UK, consumer price index data could be something that would give us more volatility on the FTSE and sterling as well. We also get producer price numbers and the retail price index. And in the latter half of the week, look out for trade balance numbers from Japan, loan prime rates from China, as well as more data out of Germany and the United States as well. And then on Friday, it's also a very busy day. We've got the consumer confidence numbers out of the United Kingdom, retail sales, consumer price index out of Japan, and the Baker Hughes oil rig count. Of course, the big thing to look out for this week will come out of the UK, the CPI numbers. We've been looking at the FTSE with Axel Rudolph from IG. Axel, what can you tell us about those trading the FTSE?
Well, as you just mentioned, Angeline, I mean, the inflation rate in the UK remains stubbornly high at 8.7% in June, and core inflation was actually at 7.1%, which was the highest reading since March 1992. And on that news, the FTSE 100 dipped quite a lot last week, but it has recovered since then because of US inflation basically coming in weaker than expected, both on the consumer and producer price end of things. So if you look at the daily financial bed of the FTSE 100, what you can see here is that we're currently testing the June to July downtrend line, and this comes in around the 7,459 mark. And if we were to manage to break through there next week, then perhaps we could actually recover all the way back up again towards the mid-June lows, and also the red line here you can see, and the April to July downtrend line, the red line being the 200-day simple moving average. So basically, we've got a target area in case of this current downtrend being broken through, which comes in between 7,546 and 7,583. So that's a possible upside area for the FTSE 100. But if it were to be reached, it's likely that we'll once again cap, as it has done for much of June. Now, if inflation does indeed come down, then I would expect further upside to be seen. If, however, core inflation, for example, were to remain quite stubbornly high, it is possible that the FTSE might actually retest the late June low at 7,401. I don't think that we'll be heading anywhere down towards the March and current July lows around 7,228 to 04 anytime soon, though.
Thanks very much, Axel. We'll come right back to you. The FTSE there also interesting because it's currently set for its best week since March on those hopes of Fed rate hikes ending. Now, it's really busy on the corporate front as well, as I mentioned earlier. Not only have we got banks really at the forefront, but we also have first half earnings from Ocado, as well as I mentioned earlier, the big banks out of the US. Midweek, it doesn't slow down. We've got numbers out from Tesla, Alcoa, Netflix, Halliburton, and also IBM. Watch out for what IBM says about the AI space, given we've had so much AI action recently out of Bard and also ChatGPT and Elon Musk's AI X. And moving along on Thursday, we've got numbers out of EasyJet, Johnson & Johnson, Philip Morris International, and American Airlines also out with second quarter earnings. And last but not least, on Friday, it's the turn of American Express, a very key one for us to watch because it gives us a broad indication of what other sectors and, of course, consumer-related areas of how they're feeling at the moment. And Schlumberger as well out with second quarter earnings. Let's get back to Axel now. Tesla, of course, a very interesting one, given that in recent weeks it's been announcing a lot of expansion plans for its EVs and batteries too.
Yes, it is very interesting, and second quarter results should be very interesting indeed for those who actually long the stock. I mean, it's been rising, I think, by over 157% since the beginning of the year to date. And if you look at the share price on the daily financial bet here, the risk, though, is that we might see a disappointment in the second quarter earnings, because from a technical perspective, what we can discern so far is that the latest high we made back at the beginning of July, which was marginally higher than the one made in June, was actually not confirmed by the relative strength index. As you can see here, we are making a lower high, and this is called negative divergence. So maybe that was what, from a technical perspective, last week led to a short decline of a few days. But what is also interesting is that the volatility seems to have dropped off compared to the June high, which was made with a lot of volatility. So maybe volatility will pick up again on the back of those earnings. Now, if they come out as expected, perhaps given the high share price of Tesla at the moment, short term, we can see some investors taking some money off the table, in which case we could see a minor retracement, perhaps take us back towards the $250, $240 mark. That is also possible if earnings were to disappoint. However, if earnings keep on surprising to the upside, then a rise above the current July high around $284 would probably project us back up again towards the $300 mark. But watch this space closely. From a technical perspective, it does look a little bit as if we could perhaps see a surprise to the downside. But even then, we would have to take out the late June low at around $239 for a top to be formed. And unless that happens, the trend is your friend, and that's still pointing higher.
Trend is your friend indeed. Thank you very much, Axel. And like Axel mentioned earlier, if there is a Q2 delivery beat, it also, as many analysts have concurred, it leaves room for more upward guidance revisions. And also watch out for the Cybertruck launch, which could emerge as a catalyst for Tesla in the second half. Until then, have a good weekend, and do look out for all our market moving commentary on our IG Twitter, or indeed Axel and my own Twitter pages too. Thank you for watching.